morning. You're watching Business World Live. I'm Danny Laurel. It's the start of a new trading day. Let's kick off with our banner story. The Philippines fell short of its budget deficit ceiling in the first half of the year after missing its spending target by 10%. You can see that on your screens here. Data from the Treasury showed the fiscal gap reaching 716 billion pesos. That's 30% lower than the 1 trillion plus pesos program for the January to June period. Still, that budget deficit was 28% bigger than what was seen in the first 6 months of 2020. Now, the first half fiscal deficit was below the program, with the government exceeding its 6-month revenue goal by 5% while falling short of its spending target by a whopping 10%. This has prompted analysts to warn that underspending could hamper the economy's recovery. In June alone, the budget balance swung to a 150 billion peso deficit from a surplus of 1.8 billion pesos in the same month of last year. That's largely due to base effects since the BIR had to move the April 15 income tax filing to June of last year due to the lockdown. Total spending increased by 13% year on year, while revenues declined by 30% from a year ago. Analysts have been flagging that muted spending in the first half could completely derail the economy's recovery. Business groups welcomed the call of President Duterte in his last SONA for the passage of legislative measures intended to help the economy recover from the downturn caused by this health crisis. Employers Confederation of the Philippines President Sergio Ortiz Luis touted as positive developments the push for the approval of amendments to the Public Services Act and the creation of the Department of Disaster Resilience. Meanwhile, Phil Exporters Confederation Chairman George Barcelon said the group expects the proposed amendments to the PSA, the Retail Trade Liberalization Act, and the Foreign Investments Act to be passed soon. This after Duterte called for the immediate approval of said bills. The American Chamber of Commerce in the Philippines is likewise optimistic, saying the aforementioned bills will support economic recovery in the years ahead. Well, it's not only an internal deficit, but an external one as well. You can see on my terminal here, we are still in a double deficit situation. The Philippines posted a balance of payments deficit of $312 million in the month of June. That's narrower than the $1.397 billion shortfall in the month of May. Now, that brings our January to June balance of payments standing still at a deficit that's at $1.94 billion, and that is a reversal from a surplus of $4.109 billion, which we saw a year ago. Now, let's take a look at our peso here, continuing actually to strengthen. We are now at 50.369 to the greenback. We had actually risen yesterday. That's as Moody's had affirmed a stable outlook to our economy. However, some risks remain, especially for emerging market currencies. You can see on my terminal here the 1-month basket of Asia, wherein everyone is in the red, with the Philippine peso the worst performing in 1 month. We are down by 3.4%. In terms of spot returns. And what is causing this? Investors are saying that there is speculation that the US may be restricting investments in China and Hong Kong, and that dragged the yuan to a very strong sell-off along with the rest of emerging Asian currencies. Now, what exactly is going on here? Now, you can see the Asia stocks, especially the ones in China and Hong Kong, just massively sold off here. The Hang Seng down by 4.22% yesterday, but you can see the Shenzhen and Shanghai Composite down by around 3%, and the HS China is down by 5%. It's actually at a record drop for the China shares trading over in the US. There are, of course, a lot of concerns on this regulatory crackdown that is happening over in China. That's as Beijing is clamping down even on the private education industry. This has shocked even some of the most seasoned China watchers. They are rethinking how far Xi Jinping's Communist Party will be tightening its grip, and they are now scrutinizing all the stocks they own, from internet and real estate firms to even food delivery platforms. Chinese shares in the US succumbed to a record drop. The yuan, as mentioned, lowest since April, and this has caused the rest of the emerging market stocks to erase their gains for the year. The MSCI Emerging Market Index down by 2.4% on Monday. Now, if you see our own local index, we do seem to be going in that same direction, although we don't know, of course, whether these are domestic woes dragging the borders down, the Delta variant all over Southeast Asia, or this China route as well. But as it happens, we're down by 0.7%, closing in on those 6,400 levels here. And finally, just a quick peek at which ones are performing or going the other way. You've actually got some six stocks here in the green, led by LTG and Metropac, with Metropac had been one of the best performers already yesterday. However, you've got Ayala Land, JG Summit, and ICTSI on the losing. And now here to talk to us about all of these developments and more, we have with us Japheth Tantiangco of Phil Stocks. Good morning, Japheth, and welcome back.
Good morning, Ma'am Danny, and my pleasure to be on your show.
Japheth, let's talk about the domestic economy first, and what is moving our bourse right now. We also have some new developments here in terms of Okta now urging a 2 week lockdown in NCR. In their latest research, they said that the reproduction rate is now at 1.33. Tell us, how are markets digesting this already? Is this something that is being priced in, and to what extent are there still downside risks?
Well, if you're going to look at it, yes, the Delta variant, it is still the main headwind of the local market right now. That's the reason why we're having this steep decline, which started, we peaked at July 5, and starting then, we've been declining. The main reason for that is investors are pricing in the possible impact of the Delta variant. But the problem there is it's very much uncertain because we don't know yet. We don't have an idea yet of how wide the scope has already been, if the Delta variant has already spread further in the country. One thing that investors are very much worried about is if we really see more signs that of the Delta variant's presence here in the country, then there's the possibility of a return to a stringent quarantine measures. And as we've seen yesterday, we already had the Okta research team recommending a circuit breaker lockdown here in NCR because of the surge of the cases allegedly due to the Delta variant. Now the problem there is that the NCR, it comprises, or it accounts for 32.1% of the economy and the average in the past 5 years. So again, if you're going to put the NCR on a lockdown, this is the country's economic powerhouse. If you're going to put this one on a lockdown again, then it's going to be detrimental to the overall economy. It's expected to drag our productivity levels, and at the same time, it's going to have a negative impact on our GDP again. And given that possibility, we're seeing this negative reaction right now from investors. At the same time, we're seeing that that low value turnover. Net value turnover is just averaging a little above 4 billion, which is below compared to our usual average of around above 7 billion, showing that many investors are staying on the sidelines because of the uncertainties caused by the current COVID-19 situation, which is amplified by the Delta variant.
Jafet, is this, if you look at the chart here, we've already broken through all the moving day averages. Is this already a clear trend? And how do we see where the support levels are going to be? Are we going to be erasing all the gains that we made basically since the end of May?
Well, chart wise, we're seeing a support right now at 6,400. And yesterday, the market was the day prior to yesterday, the market declined below 6,400. But yesterday, it went back above. But the problem is, yesterday we had low net value turnover, so we didn't have conviction. Moving forward, that's what we're looking into. We're looking at 6,400. If we are able to hold this support level, then there's the possibility of a consolidation for the market, with the support at 6,400 and a resistance at 6,600. However, if we break below 6,400, then yes, there's the possibility of a further decline. And if the market declines further, then the next support level that we already see is at the 6,160 range.
Okay, Jafet, is there going to be a spillover from the Chinese issue, the China slump, so to speak, because it did have an impact on other markets and even currencies, and even China stocks in the U.S. Is there anything to do with our sentiment as well here in the Philippines, or are we shielded from that?
Well, sentiment wise, for now, we believe that the main concern of the Philippines is still the COVID-19 situation here in the country. But moving forward, if this crackdown in China continues, then it may have an impact on our economy. Remember that well, first and foremost, they are tightening. They are tightening the regulations, and the tightening of the regulations tends to have an impact on the productivity of a country. The less the free market the country is, then then it has a big impact on how much goods and services it can produce. Now
Mm-hmm.
the problem there is China is becoming one of our significant economic partners, especially in terms of trade. They're taking a lot of input from us. So if China's economy weakens because of this regulatory or this ongoing tightening of regulations, then it may have a spillover effect on our local economy. It could add or it could aggravate the already challenged economy that we have right now because of the virus.
Okay. And finally, Jafet, before we let you go, Meralco earnings here, on the one hand, above pre-pandemic levels when it comes to the industrial side, but on the other hand, still below that. And it's quite a mixed picture that some received it positively, but even the chairman MVP had said they cannot give an outlook just yet. Tell us how much optimism is there, and how much does this determine the other earnings that are going to be coming in the second quarter.
Well, with respect to Meralco, first and foremost, they did show good results for some. So far, they were able to post good results in the first half of 2021. But moving forward, there's still a lot of uncertainties for Meralco. I mean, if again, if we go back to that strict quarantine measures, if we see a reimplementation of strict quarantine measures in the second half of 2021, then it is expected to weigh on electricity demand, and this in turn is going to in turn weigh on Meralco's operations. Add the seasonality factor that usually in the second half of the year, electricity demand is really weak, and because of because of the current weather conditions in the said period. So those will be the challenges that Meralco could be facing moving forward. As for other companies, well, for the second quarter, again, we may see better results for the second quarter of this year compared to the second quarter of last year, but that's going to be mostly because of low base effects. As for the second half of 2021, again, it would depend on the developments. If we see the Delta variant spread controlled, if we see a faster vaccination campaign, and if we see a further easing of restrictions, then we're expecting that overall our corporates will be posting better results. However, if we see the opposite, meaning further spread of the Delta variant, and a slow vaccination campaign and retightening of restrictions, then there's a possibility that we may still see a mix between a mix with a downward bias, with many possibly still posting a decline in the second half of 2021 in terms of corporate results.
So Meralco definitely and not yet out of the woods
Yes,
there, especially with the current situation and their sensitivity towards that. Thank you so much for those insights, Japheth and Yanko of Philstocks.
you're very much welcome.
Checking in on the other headline, we are keeping our eyes on the executive department is still working with Congress to create an acceptable and balanced version of the security of tenure bill. Presidential spokesperson Harry Roque said this after the measure was left out during President Rodrigo Duterte's SONA last Monday. Roque said that the bill continues to be a promise and claimed that the administration will work to make it acceptable to all stakeholders. Ibon Foundation, on the other hand, has called the government's job creation record, quote, the worst in 6 administrations and 35 years after the Marcos dictatorship. This, as the think tank noted, that the average annual jobs created under Duterte's term decreased to 313,000 from 827,000 under former President Noynoy Aquino. And that's a first look into the business day. Today's Wednesday, July 28, 2021. Catch Business World Live for the market close. That's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.